Welcome back. You're still watching Global Mantra, and I'm still in conversation with Jim O'Neill of Goldman Sachs Asset Management. Jim, let's talk about India. I mean, we've seen a rise of almost 300% over the last 10 years in the market. Over the next 10 years, what's the expectation from the market as well as the economy?
Well, I don't think the market's going to do 300%, unfortunately. You know, whilst I remain bullish for the BRIC markets, I doubt they're going to repeat what they've done the past 10 years, and India's been right at the forefront of it. And right now, even with the correction it's had, it still seems relatively expensive compared to the others. So I think this year is not going to be a great year for the Indian market, but what happens after that, it kind of depends on the economy, stupid, as they say. India's potential, as everybody knows, because of its demographics, is remarkable. And I find myself thinking, the more I look at this decade ahead, and it's the first time I've really found myself thinking this, that finally India might grow by more than China, which of course is such this great ambition of so many Indian thinkers and probably Indian people. And because of the demographics, it is possible, because the demographics are really powerful. However, there are so many things that India needs to do that with colleagues I've written about, the most famous of which was back in 2008, that they don't do it. You know, as is often discussed, India's democracy is so fantastic that it's too fantastic, because it doesn't allow anything to actually get done. India needs a bit of Chinese policy making.
Is that the sense that you got from the budget this time around? The 4.6% fiscal deficit target, divestment put in at about 40,000 crores, and making aggressive plans about opening up the financial market, especially the debt market in India.
They need to do more. They need to. You know, one of the simple measures I look at is how much FDI is going into India, and it's hardly changed, and it's partly because Indian policymakers don't allow it. Again, contrast it with China. You know, for the poorest people in India, it would be fantastic to allow some of the best multinationals around the world access to the Indian retail business, access to Indian financial services, access to Indian agriculture, perhaps even. And of course, politically, it's very hard in a coalition as complex as India's for politicians to agree this. But you know, these are the kind of tough decisions that have got to be made somewhere down the line.
Scams and scandals?
Fact of life in India.
Only in India?
Fact of life everywhere, it's true.
Okay, so those don't deter you at all?
They don't worry me that much. I mean, they're an ongoing thing in life. You know, people that sort of seem to think that those are a unique challenge of today, you know, they've obviously not been looking at life very closely, because they're always around.
Right now, there are a lot of risk factors globally that are impacting markets. How would you rate these risk factors?
Listen, maybe I've become a wizened old cynic, but having been around 30 years, you know, catastrophes, accidents happen. It was, if you look at a survey of investors in February, I think it was the most bullish it had been in 2 years. So one of the reasons why this earthquake and the Middle Eastern thing is having such a big impact is because it hit a market that finally got bullish. What this problem is doing is getting rid of all the weak bulls, and I kind of quite like those things. So, you know, yes, right now the popular view is, well, it's risk off and we're all going to be risk averse, but the smartest times to make money is when nobody else wants to do something, when there's value. So,
but where do you see the most potential? In which asset class over the next year?
Equities. I think equities still look highly attractive.
All right, Jim, you leave it without thanks.
Okay.
Thanks very much for joining us on today's show. With that, we come to the end of this edition of Global Mantra. Catch us again next week with another special guest.
I think the euro will do very well over the next 3 to 5 years, but it's not going to replace the dollar. So we are talking about having the reserve currency as the dollar for another at least, 10 to 20 to 30 years. We are more bullish on India than on China. The cycle in India over the next 2 to 3 years, in terms of the development in the bond market that you mentioned, in terms of the pickup in IPO activity, I think will be more pronounced in India than in China.